In this video, we'll look at the Ethereum merge and if it can push ETH to a new all-time high versus Bitcoin. It's looking very likely at this point. We'll also be looking at some of the latest updates and analysis on ETH and how institutions are playing this. So I'll leave all of the timestamps in the description below. Firstly, we're going to come to the ETH BTC chart. There's two things playing out here for me. The first is the long-term trend and then the shorter-term trend as well. So the long-term trend, as you can see via kind of these higher lows, is that ETH is gaining ground against Bitcoin over the medium to long term here. This is a very clear pattern. This was an anomaly when 3AC blew up and a lot of ETH bag holders had to basically sell out to stay afloat. But the long-term trend is quite clear that, you know, Ethereum is making higher lows versus BTC. Now, in terms of the short-term trade, the merge is happening in 10 days time. And so if anything is to push ETH above its previous all-time high versus Bitcoin, then in my opinion, the merge is that. For short-term traders, just be careful that you're not getting in at a bad price here, because what usually happens with all-time highs is that you can potentially get sell-offs as well. There may be a breakout, a very large breakout if the merge is successful, but there is always a pullback at some point as well. So just to keep that in mind. Also important to keep in mind is that both Ethereum and Cardano are having a hard fork or an upgrade this month. And so we, of course, expect prices to rise with speculation on that. Cardano at 12%, Ethereum at 7% up. Bitcoin is underperforming now, but Bitcoin has a halving, obviously, in a few years' time, which is going to switch the narrative to that as well. So important to understand short-term trades versus long-term investments. Let's look at how institutions are playing this, though. Really interesting stat right here. Before that, if you do want to get a deposit bonus on Bybit, check the link in the description. You can get up to $4,000 as a deposit bonus. If you trade futures, you can get that bonus. So check out the deposit bonuses down in the description. What we can see here, though, is that institutions, and I assume this is institutions because it's ETH holders of 1,000 or more ETH, 1,000 to 10,000 ETH, which is, you know, putting you in institutional category, really. We can see that they are accumulating heavily. Very, very interesting that institutions essentially, or very large players, are heavily accumulating Ethereum right now into the merge. I think this is because the Ethereum merge is essentially happening now, right? And when that was confirmed, we can see they started really back in August just accumulating, and they've been really going hard over the past few weeks. And so, you know, the merge really for me is all but done, barring something extremely strange happening, and institutions are mopping up all ETH on the market. One thing I want to highlight here, and this is an unknown in the future, is just how much ETH is going to be burned after the merge. Now, we know that EIP 1559, which was an upgrade to ETH, burns ETH tokens with fees paid. This reduces the circulation of ETH, therefore raising the price, all else being equal. As we know, the merge is going to take miners out of the equation, meaning all the ETH that they now get as a reward will be going to investors and holders of ETH rather than miners. Now, you can simulate the merge here. So the supply growth of ETH for now, right now, is 4.2% per year. So there's 4.2% more Ethereum in the market every year just from the mining rewards that it gives out. This is obviously not good for the price because it's a weight on the price, right? You need 4.2% plus more demand in order to raise the price because you have 4.2% of selling pressure. Now you can simulate the merge, so we'll do that here. And you can see after the merge, the supply goes down to 0.2%. Let's call it 0%, right? So you're taking 4% and taking it away. Now, that has the effect of essentially all else being equal, raising the price by 4% a year. You're also getting staking rewards as an investor now. So it makes Ethereum a more investable asset for sure. The question now, though, is this sustainable? Like, is it going to keep at 0%? Is it going to be -%? Because obviously the more supply that is taken out of existence, the more the price will rise, all else being equal. How much is going to be taken out? Well, I personally don't think it's going to be as much as people think, and here's why. What we can see is that layer 2 on Ethereum is burgeoning. This is great news for users and for the Ethereum ecosystem because it creates new use cases. There is a very, very small use case for paying $7 per transaction on Ethereum. That's only a use case for extremely large transactions. big amount of users. You have to attract users in with new use cases, and that requires fees to be basically zero. The way Ethereum is doing that is by scaling. But what that also does is potentially reduce the amount of fees paid on the Ethereum blockchain. So you're taking money away from yourself. Now, as we know that there's another upgrade coming up called EIP 4844, I believe, which will reduce transaction fees further for its layer 2s. And what we can see is that Optimism and Arbitrum are growing massively in popularity. This is both a good thing and also potentially means that there won't be as many fees on Ethereum. There's an equilibrium here between having much lower fees and just far more users. So more users paying less. No one can really tell how that is going to end. But one thing is for sure, you can see that layer 2s, for example, Arbitrum, are going to take up the vast majority of transactions on ETH. And so a lot of people are making out on Twitter, and a lot of articles are making out that ETH will be a massively deflationary asset and it's going to the moon. I think you have to come back a little bit from that and say a best case scenario is probably ETH being slightly deflationary, and that's still a good thing. And it also creates a reliable asset, which I think is the more important thing if we are to think of ETH as a currency rather than an equity that gives you returns in fees. If ETH is to be a currency, it really needs to be reliable in terms of its supply and not being a crazy deflationary asset, which can be extremely volatile. So that's some things I'm thinking about. In general, having a reliable asset is good, and I believe it won't be as deflationary as people think. I also believe that over time, yields will come down because people will essentially buy into ETH, pushing the yield down. So for now, the yields are very good. I believe in time, yields will obviously come down. But in general, that's positive for the Ethereum ecosystem, with these layer 2s attracting many more users. ETH for right now, though, is incredibly strong. It is charting in a very strong bullish way. Lots of different chart patterns here, but the most recent is a sell-off from typical resistance here into a falling wedge of sorts, which is actually a bullish pattern. We've had the breakout right here. So it looks like ETH is going to search for some new higher levels here. Also really important is this is the Ethereum merge and also the latest CPI figure in America. If CPI comes below expectations, I believe the market will rally, and you have Ethereum, which is by itself already wanting to rally and essentially reach this level again, which is 2000, and potentially break through. So a very interesting time in the market that we're waiting for. Also really important to understand is that in Europe, we're getting stimulus. 65 billion euros printed by Germany. The UK is starting to do this, and France and other European nations are starting to inject stimulus into their economies. We know what stimulus does. We also have the Bank of Russia here agreeing to legalize crypto for cross-border payments. We're really at the start for crypto. I believe there's so much more in the medium term as well. The Bitcoin chart, as you can see, is really weak, right? It's a weak chart. Any strength gets sold into, any strength you can see just gets sell-offs. However, what we can see here is the CPI figure in America that's coming out. If this comes in weak, it signals that the Fed may ease its policy a little bit, and that could push Bitcoin up, considering we're going into a recession, which means that governments may actually ease their policy, reduce rates, and even have some government stimulus to try and stimulate growth again. Very important time for both Bitcoin and Ethereum, how they're playing out right now. And for ETH, it's looking much stronger than Bitcoin in terms of the chart at the moment, but things can change, especially with the macro, which is unpredictable. If you want to go ahead and trade on Bybit, link in description to a $4,000 deposit bonus. You can see this platform here. They'll give you up to $4,000 in your futures trading account if you make a deposit on there. So check out that link if you want. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.